Credit unions and banks are both financial institutions that offer similar services, but there are some key differences between them. Here's a comparison of credit unions and banks. 1. Ownership and structure. Credit unions. Credit unions are member-owned financial cooperatives. They are non-profit organizations, and their members are also the owners. Each member typically has one vote, regardless of the amount of money they have deposited. Banks. Banks are typically for-profit institutions owned by shareholders or private investors. They aim to maximize profits for their shareholders. 2. Membership. Credit unions. Credit unions have membership requirements. They may be based on factors like geographic location, employment, or membership in a specific organization or community. Only eligible individuals can become members and open accounts. Banks. Banks are open to the general public. Anyone can become a customer and open an account. 3. Customer service. Credit unions. Credit unions are often praised for their personalized customer service. They tend to have a more community-oriented approach and may offer more individualized attention to their members. Banks. Banks generally have a larger customer base and may not provide the same level of personalized service as credit unions. However, they often have more extensive service offerings and technological advancements. 4. Products and services. Credit unions. Credit unions typically offer a range of basic banking services, such as savings and checking accounts, loans, mortgages, and credit cards. They may have fewer branches and ATMs compared to banks. Banks. Banks offer a wide array of financial products and services, including savings and checking accounts, loans, mortgages, credit cards, investment services, insurance, and more. They often have a larger network of branches and ATMs. 5. Fees and costs. Credit unions. Credit unions tend to have lower fees and costs compared to banks. They prioritize serving their members and may offer lower interest rates on loans and higher interest rates on savings accounts. Banks. Banks may have higher fees and costs associated with their services. They often have a profit-driven approach, and their fees and rates may reflect that. Are credit unions safer than banks? Both credit unions and banks are insured by the federal government, so your money is safe in either institution. However, there are some reasons why some people believe that credit unions are safer than banks. 1. Credit unions are less likely to fail. Credit unions are generally smaller and more community-focused than banks, which means they are less likely to take on excessive risk. This makes them less likely to fail, which would protect your deposits. 2. Credit unions have a different regulatory structure. Credit unions are regulated by the National Credit Union Administration, NCUA, which is a separate agency from the Federal Deposit Insurance Corporation, FDIC. The NCUA has a different approach to regulation, which some people believe is more focused on protecting consumers. Credit union versus bank, which one is right for you? The best choice will depend on your individual needs and preferences. If you're looking for lower fees, higher interest rates, and better customer service, a credit union might be a good option. However, if you need access to an extensive network of branches and ATMs, a bank may be a better choice. Here are some additional factors to consider when choosing between a credit union and a bank. Your financial goals. If you're saving for a long-term goal like retirement, you might consider a credit union that offers a higher interest rate on your savings account. If you are planning to take out a loan, you may want to compare the interest rates and terms of credit unions and banks. Your location. If you live in a rural area, you may not have many options for a credit union. Banks are more widely available, so finding one near you may be easier. Personal preference. Some people prefer the co-op of a credit union, while others prefer the convenience of a bank. Ultimately, the best way to decide is to compare the options and choose the one that best suits your needs.